Big news out of Apple's earnings report yesterday. Here's what you need to know. Hello, my friend. Andrew here with a follow-up video to my earnings prediction video earlier this week, where I said the following.
And there hasn't been enough time yet for the iPhone in the marketplace to make a significant impact. So I think it's going to be a non-factor now, and the stock's going to slide because of this.
And if you watched that video and subscribed to make sure you didn't miss this one, thank you very much. If you're a first timer though, hit that big red button and like this video. It would mean a lot. So with Apple's earnings, looks like I got it partially right. Here's what I mean. In my prediction video, I said they were going to barely meet or just miss the expectations on revenue and earnings per share. Well, they actually beat both of those and they blew them out of the park, which is great for the company, great for long-term growth. It means people are still buying their product. When you break it down component by component, which Apple's nice to do, they give it to us in that data. They go through revenue for iPhones, for Macs, for iPads, other products, services, and gross margin. They actually missed on iPhones, which is something that I kind of called out in my first video, saying the new iPhone model hadn't had enough time on the market yet. So I did not think that it would impact earnings this quarter for Apple, but I think it will impact earnings for Apple in the following quarter for the Christmas holiday rush. Looking at the data here, they did miss on iPhones, like I said. The MacBook revenue, this Jimmy right here, this thing sold like crazy. They were up $2 billion in estimates and they blew past their expectation for revenue, and they brought in $11 billion in revenue selling MacBooks last quarter, which is just crazy, phenomenal. The drive for computers is there. iPad was just a miss. They were missed by about half a billion. Nothing just too big there, nothing too big, $500 million. Other products, their kind of service industry just missed again as well. So they were up and down in their hits and misses, but they had some good growth in the MacBook sector, and they actually did okay in the other products as well. Some of their wearables and their tech kind of stuff did well as well. That's good. They did not provide guidance though, however, moving forward. Again, Tim Cook and co did not provide guidance, so they're still kind of playing out this kind of economic update. They're saying there's a lot of uncertainty still in the markets, and they're just kind of keeping things kind of hush-hush going into the December, November, January kind of season, where traditionally people spend a lot of money around Christmas time and they tend to buy Apple products, tend to buy phones for different people. The businesses are rolling over their budgets for the year, so that they kind of get new tech and new hardware out to their employees as well. So all that kind of gets caught up in the Apple sales for the last 3 months of the year. One other thing to note here, Apple also cited that in their report that they are deliberately starting to hire slower, which means they're just kind of scaling back their operation. They're not doing any kind of the cuts that we've seen around other companies, especially in the crypto space and some of the tech companies out there. They're just going to slowly hire and just kind of bring down the level a little bit with the speed at which they're kind of growing, which means they're maybe anticipating a little bit of a slowdown in the next quarter. And again, Tim Cook says the pace is just kind of coming down, and that they just want to kind of be more planned, more thought out, more kind of well-defined what they're going to do and what they're kind of look for to fill those gaps, which is a good thing because they're thinking about things. They're not kind of rushing and just kind of having a crazy amount of hiring and kind of laying people off, which I like better. It's just kind of a little bit more of a calculated kind of way to do it, which I like. And so basically, Apple just kind of keeps growing, keeps doing their thing, keeps chugging along. They kind of have a mixed kind of bag of results, but their stock, I'm recording this before market opens today on Friday, October 28th. Their stock is set to open, I'll pull up the chart for you here, a little bit higher, about $2 higher than it closed yesterday, but it is coming off of 2 days of solid beatdowns where it dropped 3% yesterday and almost 2% the day before. So a 5% drop. It's looking to bounce back off this earnings report and potentially get back up and hit that potential 20, 50, 200-day moving average. So what I'll say about this is that I was 50-50 kind of right and wrong. It's really hard to predict these kind of stock movements and what the stock's going to do. I thought it was going to sell off after this. Looks like it's going to rise a bit after 2 days of selling, but remains to be seen. Apple still seems to be a strong player, like a safe haven when times get tough. What do you think about Apple? Do you want them in your portfolio long term? Let me know in the comment section below. And one thing's for sure, any kind of stock out there as we go through this earnings season is getting beat down if it misses all across the board, earnings and revenue. Take a look at Facebook. I put out a short yesterday about it. This is what happens when you miss earnings. It gets ugly quick.